Good morning. Welcome to the XM.com weekly market update. And we're joined once again by Peter McGuire, the CEO of XM, joining us this week from Mumbai in India. Pete, welcome.
Good morning, Andrew. How are you?
Well, thanks. Let's get into these numbers. Domestically, the building permits, the final numbers have come out today, year on year, down 31%. And that chart there is only a one-year chart, but it's not the best looking chart you've ever seen.
No, it sure isn't. And I'm not sure what I have to say on that one. It's just the numbers tell the story. I don't need to add much to it, but just for our viewers, they get a real heads up as far as what the situation is. And from there, I think it's time for the next slide.
Yeah. Speaking of which, the Aussie dollar versus the US dollar index. So we were chatting off air about how far off that US dollar index it's come. It doesn't seem that long ago. It was around about that 114 mark. It's now sitting just above 102. And the Aussie, it's been up and down a little bit, but it's in a bit of a range there at the moment.
Yeah, very much range bound. There hasn't been any excitement compared to other currencies over the last month and a bit. It's been very, very flat, and the chart tells the story. But that US dollar index, it got hammered to the downside. A couple of things on that. You've seen gold move up dramatically. You've seen Bitcoin since November. It's up 100% from the lows of 15,000 to 30,000. And that 115 or 114 in October 22, the blue line, there were many traders saying, is 120 going to be the new handle? Well, it didn't get there. And now plenty of traders are saying is 95. So the volatility across that US dollar index is immense. And it's just, you can see why currencies is such a hot thing to trade, Andrew.
Yeah, and I think obviously we've got the US CPI numbers tonight. So that's going to have a huge influence on interest rates and obviously the US dollar.
You bet. They drop here at 5:30 p.m. I'm on a flight at 7:30 back into Dubai. So we're about 6 hours out. And it's still even Stevens, and some of the comments that I'm seeing from Goldman Sachs and from traders on Bloomberg is, we've just got to see how that number drops. And some are saying if it goes back up, then that's going to be damning for the S&P. And so everyone's got an opinion, and we've just got to see how it all materialises.
Yeah. Speaking of which, we're looking at some of the index versus some of the banks. Obviously, the banks have clearly underperformed in recent times on the back of all the turmoil that's been happening there in the last month or so.
Yeah, you bet. We've got earnings coming out Friday. I think they're going to drop. And I think that if I look at that and my memory serves me correctly from this morning, I think it's JP Morgan, Wells and Citigroup that are all announcing their earnings this Friday. I wouldn't like to be Wells Fargo when you're seeing that big collapse over that first quarter and how that's going to materialise as far as, just the earnings and what that'll reflect. So again, financials, wow.
And on the other side of the coin, you look at the NASDAQ there, which seems to be fairly pricey at the moment. But once again, those tech stocks have had a great run in the first couple of months of the year. And it was nearly like as the banks were struggling, the flight to safety was back to those big tech stocks with all that cash.
You bet. After Christmas, everyone said, is it going to have another leg down? And it went completely the other way. January was out of the blocks. It was outstanding. And since then, it's been a fairly choppy, but there's still NASDAQ. I'm still above 12, so 12,000 that is. So that's a good sign, and off its highs of 16,000, but certainly off its lows of 10,000. Yeah,
for sure. The PMI numbers came out a little while ago, both heading south, which is probably an indicator of a bit of a weakening in the US economy.
Yeah, that manufacturing PMI really doesn't look too sharp at all, and don't get in the way of a falling knife. That one, I'm not sure where you're going to see a bottom out, but it's approaching that 45 at record velocity. If you're looking at the non-manufacturing, that's a little bit lumpier, but I'm still, is it going to be over the next reporting time? Is it going to be sub 50 as well, Andrew? We've just got to wait and see.
Yeah, it's looking that way. And once again, there's signs that the labour market's weakening slightly in the US as well. So which, that's been holding up very strongly for a long period of time. But are there a few cracks starting to emerge there?
Yeah, you bet. Well, again, but they've been good size, well, pardon me, not good size, but sizable layoffs across the tech sector, pretty much globally. But yes, we've just got to see how this quarter plays out. I think this one's going to be a sharp one, and you've had a really big return back to energy prices, boomed up, and gold. And so, yeah, everyone's got an opinion at the moment, and it's, long and short and everyone else.
And everything in between. So once again, the CPI numbers out tonight in the US, that's going to have a fairly big bearing on what the Fed does with interest rates. It's a bit of a 50-50 shot at the moment as to do they hold next time, or do they put it up another 25 basis points?
Exactly. Yeah, I think it's, jury's out, and everyone, again, we've just got to see how it drops. And there's enough comment out there. You've got to sit here and just observe.
Yeah, and finally, we've been using this chart quite a bit lately. It gives a really good snapshot of the interest rate market in the US. Both the 10s and the 2s have crept up slightly over the last few days. Nothing extreme. Like, once again, that may indicate that the Fed's got maybe one or two more hikes left in them. But as we're seeing, that market can be very choppy as well.
Yeah, you bet. So are we going to see? Is May going to be the last call? And that all depends on that inflation number and then leading forward. So, again, so many people, so many opinions. And I think just the numbers, we've just got to live through this and see how it all rolls.
Yeah, and I think, as you say, there's just so much commentary out there at the moment looking at every scenario. So it's very hard to listen to a lot of the media and get a real good handle on things, but very much taking it by week.
You bet. And it can be confusing for traders, and that's why sometimes it's better just to look at your charts and just have an opinion and go boom. And they can get washed up in that, the fundamentals of it all sometimes.
Yeah, definitely. Yeah, but anyway, the big one tonight, CPI. So we'll keep an eye on that, and then we'll touch base again next week.
I look forward to it, and it's great to see you, and to all of our traders out there, good health and happiness.
Great. Thanks, Pete.
See you, Andrew.
And that's the XM.com weekly market update.